Okay, good afternoon everyone again, and today we'll discuss the first session of the Accounts Receivable module in Aria for XP. This session is mainly intended for the accounting staff or the accounts receivable staff in your company who manage the customer balances, the payments, the invoicing, and all activities related to the accounts receivable and the customer maintenance and transactions. The prerequisites for this class is definitely to have a general knowledge of the system, is to have the master data setup, specifically the customer master and basic codes file, like as we will see during the session, what will be the main codes needed for the accounts receivable staff to perform their day-to-day duties. So the first couple of slides that you have in the PDF handout is describing what's the main prerequisites. Definitely to have a customer master setup in your database, which lists the customer code, the customer name, and any other information. Once you have transactions on the customer, either debits or credits, invoices or credit memos, you will be able to start maintaining the customer AR balance and will start to do transactions, as we'll see in details. The outcome of this course, which is divided in two sessions, AR1 and AR2, the first session, you will learn at the end how to enter customer payments, how to key off the payments against any invoices or debits, which we call it the apply debit credit. We'll learn how to enter debit or credit adjustments for any reason. Examples, how to enter an opening balance for the accounts receivable as a starting point, how to adjust or to correct the balances of the AR or the customer in case of any mistake happen, and any other reason for adjustments, as we'll see in details. So we'll start with the first topic, which is how to enter and maintain the payments record. So to start navigating, you have to go to transactions from the main menu, then accounts receivable, then cash receipts. So this is the path for how to enter customer related payments, whatever the kind of payment. This will be the path that you will need to go to. Again, it's transactions, accounts receivable module, then cash receipt. Once the cash receipt opens, the first information that you have to input or confirm is the batch date. And this batch date is very important because it is the day or the date when the information will be posted to the account balance. And if you are connected or integrated with the general ledger module, this will be the date when the GL entry will be as well created in the accounting side. So you definitely can revise that date either backward or forward as long as it's within unlocked period or unlocked month. So you can either put it yesterday's date or today's date. It's by default coming to the system date. Just OK on the confirmation of that posting date. Then you enter the batch tape count, which is the number of transactions or number of payments that you will enter during that session. As you notice, the screen works in a batch. Like you can enter a deposit batch for one or multiple checks and also for one or multiple customers at the same time. So the tape count here is simply the number of checks that you are gonna enter during that session, during that batch. Tape total is the total amount of the deposit, which also you have to enter manually just for auditing purpose. So at the end, once you enter all the transactions, the system will confirm and make sure total details matching the tape total. It's exactly as if you are simulating a bank deposit slip. Like if you work in the AR, usually at the end of every day, you consolidate all your check payments received You put them together in a deposit slip, and you go deposit it in the bank, or if you have any online method to deposit. So here this is exactly a simulation of a deposit slip. You put the deposit total, and then the next field that you have to select is what bank code and what checking account that you will deposit this money into. So this is my bank code, which is also set up in a master files, as we probably discussed or will discuss in the accounts payable. It's part of the AP module, so actually it's something should be set up already once you have the AP module set up. And this is a checking account number pertaining to that bank code that you selected. And the importance of selecting this information is to let the system know first which bank account will be deposited or will be debited with the checks amount that you will enter. And secondly, when you run AP Bank Reconciliation Report, which is part of the AP module, you will be able to see as well the transactions received from the AR end. So in other words, both accounts payable and accounts receivable module both are using the same bank and checking account to either deposit or to pay transactions. If it's from the AR, it will be a deposit. If it's from the AP module, it will be a payment or a withdrawal. So once you put the bank code and checking account, now you are ready to create the detailed transaction for that deposit batch or for that cash receipt. So you click New, and now it will open for you the detail section of the payment transaction. First thing you have to know about is the type of this payment. When you receive a check, it has mainly two types, either accounts receivable related or non-AR related. If it's AR cash, meaning it's coming and it's related to a specific customer account code. The other type is non-AR, and as you can see, if I choose that, there will be no account related. So that's the main difference between the AR cache and non-AR cache. Again, the AR cache must be linked to a customer account code, and thus later on, as we'll see during the session, it will be applied against invoices or debit transaction for that customer. So that's the default case. The other case, non-AR cache, it's any kind of payment that you receive and you will deposit in your bank, but it has nothing to do with your AR or your customers. Examples could be insurance payments from insurance companies, refund of any amount from debitor or from a bank or an insurance agency. Any kind of payment that has nothing to do with your customers and your AR, you can record it here as non-AR cash. And as you can see, the system will just take the amount without linking it to any customer code. So we'll start with the first type, which is the most common, which is AR cash. Here you have to type in or select your account code. If you have the 5 digits account code in Aria, you can enter that. If not, you can select it from the list. So let's see here what we can, how we can select the account, and in case if you want to use other ways to select your account, like searching by name or by the address of the customer. All these are global features available in your Aria browse list. So you simply can rearrange or resort the account list using the column that you need, like the name or the address. And once you highlight the cursor here and you start typing in the first few letters of your customer code, the system will take you directly to that corresponding record, and this way you can know what your account code is. So that's in case if you are confused or if you don't know what is the account code. Again, let me repeat it. What I did, I just clicked on the browse list next to the account field. And it will open up the customer list, the customer master list. If you do not know the account code, you can simply sort the list by the account name. Start typing in whatever the account code or the account name, I'm sorry, in that case you will search by the account name. So I'm looking for JCPenney, let's say, so I'm going to put the first few letters, and then the system will locate it for me and I can select that account code. So once you choose the transaction type and you choose or type in the account code, you have to fill in the information of that check. So here's the reference. Reference could be a free text to describe what was the reason for this payment. For example, payment for the month of August, payment for a specific invoice number, etc. So it's a free text note that you can use generically to refer to something, either payment for a certain period, a payment for a certain transaction, and so on. Then here, this is the customer check number, which usually you will have it printed on the paper check. And finally, the amount of that check transaction. Now, there is a very important further classification of that payment, which is the AR payment type. And this is coming from the codes master in the company setup, as we discussed in the initial training sessions. You can here select from any existing code that is already in the system, or you can add new if you would like to add a brand new payment. So let me show you how to add it here, and here the system will simply take you directly to the codes master, where you can enter a new payment method or a payment type. So let's say I want to record a new method called credit card payment. So I can add that in. And related to that, there will be some setup parameter you have to enter, which is basically the accounts receivable related account. So here it will be applicable only if your system is linked to the GL, or if you are interested in down the road going forward to link with your chart of account in the general ledger, you can select that here. If not, you can bypass that field. If your system is not linked to the GL, then you can leave that field empty and the system will not ask you or will not validate it for you. The whole reason here that if you do link to the general ledger, the system gives you the ability to direct that payment type to which AR or non-AR, if it's non-AR payment, to which GL account number. So also other practices that could be used here if your company deals with a factor, and if definitely if you work with accounting or AR, you know that some transactions are paid by factor or some other transaction paid by the customer. So depending on the payment type, you can also classify your payment. Is it coming from a factor, or is it a direct payment coming from a customer to a regular invoice? And thus, the system would be able to pick up the correct AR account code that you link to that payment type. So here, once you add that to the codes master, it will be available to you from the drop-down list. So if I selected, let's say, credit card payment, if that's the case, system will realize the account, the GL account related, and this will be the amount posted to this customer, JCPenney 10, and from the GL standpoint, it will go and credit that AR account linked to this payment type. So to conclude, you just simply in the detail level, you enter your account information, your payment reference, your check number or payment transaction number. It could be a credit card approval number in case of credit payment. You enter the amount and you select the accounts receivable payment type from the drop down, and we saw how to add or to enter a new code for a payment type. So once you are done, you repeat the same step, you click new, and that will open a new line still under the same cash receipt batch. And same thing, you have to classify it either as AR or non-AR. You select the account code. So here, let's say I'm going to select, you have the ability definitely to select another account code, not necessarily the same customer that you chose in the beginning. And here I'll call it, let's say, factor payment. And I'll put the check number received, the amount Let's say this one is 500, and then I will further classify the payment according to the payment type that I have. Alright, so this is a simple cash receipt transaction. You can add as many as lines or as many as payment records as you want. Once you save at the end, the system will give them a control batch number. And here there is a simple validation. It's good that it showed that up. So here if you by mistake or unintentionally put tape count 3 while you enter 2 checks only, the system will warn you and will tell you that the tape count is not matching the actual transaction payment. Do you want to modify it or continue saving? So this is additional audit just to alert you if in case you wanted to enter 3 checks but you actually enter 2 instead. The system warn you at the beginning, at the end, so this way you can go back and enter the missing checks if you want to. If I choose to continue, system simply will confirm saving and will give me a batch number. It's always good idea to memorize or to write down or stamp this batch number to your paperwork, like the deposit slip or any kind of paper documents that you keep, because this is a key number or this is a key reference that shows up on most of the AR reports in addition to the actual check number. So this batch contains 2 transactions as we mentioned. It could be for 2 different customers, 2 different checks. So now once this is done, our next step would be to either continue with another batch payment. If I have more than 1 deposit slip during the day, I can simply add new and I repeat the same thing. Or if I am ready to key off the transaction, as we'll see in the next section, I can click on key off, and here the system will open up a new screen for me to key off the payment that I have just entered against the debits and the invoices for that customer. This is, by the way, could be done at the same time when you enter the payment or can be done later on at any time. If, for example, the customer gave you a down payment or a deposit and you don't know yet how this deposit will be applied, it's not a problem. You can save the payment and later on you can go back to the apply debit credit screen and key off the transaction. There is 2 main options that show up here and I'll explain to you what is the difference. Standard key off, it's the default and it's usually recommended in case if you want to decide what invoices will go and will be applied against the check that you select. So it's a manual decision. You decide which payment and which invoices that will relate and will be paid by that check. Versus the automatic is kind of more system reliant, and it relies simply on the amount of the payment that you have and the chronological order of your invoices. So if you have 10 invoices sorted by the invoice due date, the system will start keying off against the older invoices first. Then if there is still amount available in the check, it will go to next invoice and so on and so forth. So most of the users do not usually use or do not like the automatic way because they don't know really what the system will pick up. It just simply picks up the older invoices first and then the newer one. Versus when you say standard, system will open up this new screen and it will actually open for you the apply debit credit option, which is also available as a standalone menu option as we'll see later on. So now we are in another screen which is called apply debits credits for that account that I selected, JCPenney or JCP10. And now what the system shows me in that screen, it's a list of all the debits and all the credits of that account that are outstanding or that are still open as of today's date. Just to give you an idea of what is the purpose of the key off. The apply debit credit, or what we call it also key off, it's mainly to link your payment to your invoices. So you are linking a credit transaction, which like the payment, the discount allowance, etc., to an invoice and you key them off together, so they will be marked as closed or complete, and there will be no longer balance showing for this transaction if you printed the customer statement or the ARH. So here on the left hand side again you see all the open invoices, all the open debit adjustment or any discount or any kind of debit transactions like freight discount, freight adjustment, etc. So you simply need to select or check mark the invoice or invoices that you would like to pay, and on the other hand, on the right hand side, you will have to select your check payment that you just entered. It could be one or more check, and it could be one or more transactions. So in that case, let's say I want to choose the last two checks for JCPenney, transaction 06 and 07, totaling $2,000. I'm gonna pay invoice number 121005 and 1006. As you go and you tick off the transactions, debit and credit, the system will give you the total over there. So this way you can know if you are balancing out or no, if your total debit equal total credit or if there is any difference. So this is a very good tool that helps you know if the customer paid exactly the amount needed or there will be a balance left on account, either debit or credit. So in that example, the customer was debit with 2100, which is the total of the two invoices, and he paid only 2000 in two different checks, and this is the credit amount showing in minus. So now you have to take a decision. Definitely the simple case or the simple case scenario that the payment equal exactly the invoice. So if it's 2000 invoices, 2000 payment, nothing else need to be done. You simply need to save the session and that will mark complete both the payments and the invoice. The other scenario which we are here showing, there is a difference between the invoice amount and the check amount. So I have here to take a decision. What should I do with this $100? Is it gonna remain open balance on the account, or was there any kind of discounts or any adjustment given to the customer and probably he indicated that on the check that there is a chargeback or there is a discount, whatsoever, that have to be applied against this amount. So depending on the case that you have, you will choose one of these tabs, either debit credit on account or debit credit adjustment. Let us start with the debit credit on account. If I want to keep the $100 difference open as open balance, so I have to go to debit credit on account. I choose new. From the option I can choose one of these, either debit on account, credit on account, or open balance. Typically speaking, debit on account will be used if you want to create a standalone transaction with the $100 balance left. If you would like to keep the original transaction reference, then best practice is to choose open balance, and then the system will give you a list of the invoices that you selected at this session. So these are all the invoices or all the payment that you selected, and then you can choose which one of them that I'm gonna keep the $100 as open balance. So I selected here invoice 1005. So that means that the system will keep a balance open on the same transaction with the same reference number open until further payments in the future when you receive other payment from the customer. So this is one scenario. Let me remove that and I'll show you other scenarios, other business cases that could be applicable. If let us say this $100 that the customer still owes me, it's given as a discount. In that case, I have to create a credit adjustment to balance out the check against the invoice. In that case, I'll go to debit credit adjustment. I click new. In our case, because the debit is 2100, the credit is 2000. So I still want to credit the customer for this $100. This could be any credit adjustment reason available in the system or available in the codes master, like credit correction, allowance, discount, overcharge, etc. So if that was a discount, if it's a trade discount given at the time of payment. I'll choose discount. I'll put reference number, for example, related to whatever invoice, blah, blah, blah. So this is a free text. And here you put the amount of the discount that you want to credit your customer with. So the whole idea here that the system in that screen, it gives you the flexibility to decide in case of the payment does not equal the invoices. You can decide either you want to credit the customer with the difference to give it as a discount or any kind of other adjustment, or if you want, as we show in the first scenario, if you want to keep it on account as an open balance for future transactions or for future payment. So that's the usage of the two different tabs, how to use the debit credit adjustment and how to use the debit credit on account. As you definitely noticed, each screen or each tab of those has dual purpose. It could be to correct a credit balance or a debit balance depending on the situation, whether the payments are more than the invoices or the invoices were more than the credit or the payment. So once you zero out here in that section, meaning that the total has been corrected and now the total debits equal total credits plus any corrections, either discount given or debit credit on account that will remain on the customer balance. Once I save, now the system is done and it simply opens a new screen for you. You can decide to go back to the main screen where the cash payment were entered, and you can repeat the same for each and every check, each and every customer account that is on your cash payment receipt. So as you can see, it's two screens, two options. The first option is to record the cash payment. The second option is the key off, and this is, again, as we mentioned, there is automatic and there is a standard. The standard lets you decide which payments to key off, and the automatic will automatically select the invoices based on the date order of the invoice. So it starts key off all the invoices first, and then once it's finished, if there is still a balance left open on the payment, it goes to next invoice and so on and so forth. So let's go back to recap or to see what we have in our agenda for today. So this is actually what we discussed, how to enter a payment and how to key off the payment against invoices or against any kind of debits. We discussed the importance of the batch posting date, the data control using the batch deposit tape count and tape total, how to use the batch number because it's a key information that shows up on most of the report, which typically has to refer to your paperwork for the deposit slip that you use to deposit checks in the bank. Difference between AR cash type and non-AR cash, and we discussed that the AR cash must be linked to account code versus non-AR cash is simply any receivables or any payments that you receive that is not related to any customer. So examples could be insurance payments, refund payments from any company, and so on. So we'll keep the report at the end of the session. I'm just gonna continue with the next slide. So this is also the key off. We discussed that already, so let me skip these slides until we... Okay. Alright, so now our next section is how to reverse key off or payment transaction. The reverse key off payment is, as you can see from the name of the option, it's simply to revert or to undo either a key off or a payment transaction that you have done incorrectly or by accident, or you want to undo whatsoever transaction you have done. So the path for that is under transactions, accounts receivable, and then reverse key off payment. Once the screen opens, same thing like in the key off screen, like any transaction, you have to put the date when the reverse will take place. So typically if you have done it, if you done the transaction in today's date and you just want to reverse it on the same day, so make sure the reverse date is the same like the original transaction date. Then next step is to select your account that you would like to reverse the transactions for. So here I'm going to put GCP10. Same apply. If you don't know the account, you can use the browse list and you can search for your account as we saw before. Now there is two sections of that screen. The first section is the open payment for that customer, and the second section is the history or the key off transactions that were done on that account. So it's a dual purpose screen that could reverse a payment, meaning it will void and undo the check that you have done, or it could be also used to undo a key off session that linked invoices to payments. So you unlink them and you put them back as open transaction. So the first scenario, if I just want to void a payment, I guess I got some error here. Okay, I guess this payment has some problem. So let me see. For the history tab, it will list, as I mentioned, all the key off transactions or all the key off records that I've just done. So this is the one that we have done a few minutes ago, the 2100. It's done on October 10. So I'm going to check that patch. In the lower part, it shows me the detail of that key off. So I make sure before I undo it, I make sure that this is the one I want to undo. So it shows me the details of that key off, 1201 invoice, 900, then I have 2000 payment and 100 discount. So if this is the session that I would like to undo and reverse the key off, I select it and I click save. Confirm, are you sure you want to reverse key off? If I say yes, then simply the system will open up the transactions related and will undo the key off and put it back as open transaction. So if I go back now to apply debits credits, it will show me as if nothing happened on that account GCP10. So I'm going to put the date first. It's the date. Then GCP10 is my customer. So here you go, you will see all the original transactions that were keyed off. After I reverse the key off, it has been reopened again, unlinked, and this way you can redo the key off again to the correct transaction. So as I mentioned, the reverse key off / payment is helpful in case of errors and mistakes happened, and this is normally sometimes you could be keying off the wrong transaction or you record the payment to the wrong account. Whatsoever the scenario is, you can use that screen simply to void a payment or to undo a key off history batch, as we mentioned. So there is two tabs, there is two functions involved in that screen. Okay. So let's go to the next topic. And as we mentioned, we'll dedicate 15 minutes at the end for any questions. So just feel free to prepare your questions, probably write it down until the end, and we'll have an open discussion at the end of the session to address your question. Okay, so our next topic is after the reverse. So we discussed in that section or in that paragraph the reason for reversing AR transaction, the effects on the AR and customer balance. As we mentioned, once I undo or reverse the key off of a transaction, it goes back as open transactions, either payment or invoices. It will show up again on the aging report on the customer statement balance as if nothing happened. If it's a payment and I voided the payment, it will totally be erased from the customer balance and it will show as if nothing happened or no payment happened. The next section in this session will be how to enter an AR adjustment, either debit or credit, for different reasons like opening balance, allowances, chargebacks, etc. So all this will be entered still from within the transaction accounts receivable section, either from the credit adjustment screen or the debit adjustment screen. So both screens are typically the same interface, it's just the effect on the customer balance will differ. So if I'm creating a credit adjustment, then the customer balance will be reduced or credited with the adjustment amount. If I'm creating a debit adjustment, the customer balance will be increased or debited with the amount I adjust. So the same like any other transaction, you confirm the posting date, the batch date, which is used again for your as your posting date. It could be also by default today's date, or you can go backward or forward as you want. Same thing, you can enter it in batch, so you can enter different number of transactions. You will enter the tape total number, total dollar amount of the transactions in that batch. Then you click new to add your detailed transaction for that batch. You either select or type in your account code, and you classify your adjustment using the adjustment reason. The adjustment reason is very important here for the reporting purpose, because as you know, you might have several types or several reasons for adjusting the AR balance. Either it could be, if it's a credit, it could be allowance, it could be a chargeback, it could be a correction to an invoice. So all these are examples of business usage or business use for the adjustment. Could be a discount, could be a credit collection, advertising allowance, anything. And just to show you how, the same way like we did before, you can add to the codes master by clicking add new, and here the system will give you the ability to add a new credit adjustment reason code to be used in the drop down. So let's say this will be, I'm gonna call it chargeback. So I'm crediting the customer for any kind of chargebacks reason, and here I'm gonna classify that adjustment reason code. Is it a freight, discount allowance, or miscellaneous allowance? This is a system defined parameter, and simply if it's a generic reason you can choose miscellaneous allowance. Then the adjustment code, and again this is applicable only if you do link to your GL module, your accounting system and chart of account. So you can classify or you can choose how to direct this this chargeback or this adjustment to your GL. So let me choose here, let's say I'm gonna classify it as a discount, sales discount. Bank code and bank checking account is inapplicable in that case, is not applicable, so you can leave it empty. It will be used only in case of a payment. So in case of adjustment, you don't have to worry about bank code and bank checking account. So once I am done with that, the system will simply add this new adjustment reason to the drop down, will classify it depending on the GL account that I linked to, and will consider it either as a miscellaneous allowance, discount allowance, and so on. So now I'll continue with the transaction entry. I can put a short note, and the short note here in the reference will show up on the report, so it is important to fill any information needed. So you can put any hint, what was this charge related to, and the description of the chargeback. Here you will put the amount, let me put 500. Now you will notice another window will open up, it's the sales representative chargeback. If you would like, or if you currently keep track of sales rep commission, which is optional by the way, if you do and you need to charge back the sales rep on this credit amount, so you have the ability here to link back this charge back to an invoice number, and thus the system will pick up the related sales rep and the related sales rep commission to be deducted from commission due or the commissions calculated for that sales rep. So the idea here simply you can link this credit mem or this credit adjustment directly to an invoice. The system in that case, if you do, it can credit back or it will charge back the sales rep commission with an equivalent amount based on the deduction and based on the commission ratio of that sales rep. So once you are done, you repeat the same thing for a new transaction, and same thing, we are just can select same account or different account depending on the case. If you have more than one customer, you can enter the chargeback for them or the discount or any kind of credit correction in the same batch. And here I'm gonna select the amount, that will be 200, and if I want to link to an invoice, I can do so. If not, I can bypass that, and in that case the credit will be actually open for me and it's not linked to any invoice until I go and apply it or key it off as we did before. Same thing for the debit or the credit adjustment. The system give it a batch number and a batch date. So make sure that you keep that batch number for reference as it shows up on the reports as usual. So nothing is different with the debit adjustment. The screen is typically the same like the credit adjustment. As we mentioned, the only difference is the effect on the customer balance. In case of credit, it will go and reduce or credit the customer balance. In case of debit, it will increase or debit the AR and increase the customer balance. Everything else on the screen is typically the same. You select the account, you select the adjustment reason, factor code if applicable, reference, description, and amount. So let us see what we have next. So that's as far as in that section we discussed the different reason for adjusting AR, and we said this could be used generically to either indicate a discount, allowance, a chargeback, a debit adjustment like freight charges, corrections, etc. And the adjustment reason code is very important because it will let you classify the report later on, as we'll see, based on the adjustment reason code. We discussed what is the effect on the AR and customer balance, and we discussed when or how to use the debit on account, and this probably I skipped that point. The debit on account is actually needed only in case if you enter a debit adjustment that will be part of another existing transaction. So let me show you that part. If I'm entering here a debit adjustment and whatsoever the same account code that I have, and I'll classify the reason for the adjustment, debit correction, freight, etc. This checkbox, debit on account, actually if you are creating a standalone transaction, make sure it's unchecked. Do not check that box. If it's a transaction that will be or that was part already from an original invoice or an original debit, then this is the only case when you will check that debit on account, meaning that this actually a disputed amount that will be left open on the customer balance until you further investigate the original invoice and see how it if it's resolved or if it's keyed off against other transactions. So the conclusion is, as long as if you uncheck this parameter, meaning that it's a new debit amount, it's a standalone transaction, and it will be shown as either a debit correction, as a freight charge, or whatsoever. You just check debit on account only if it's part or if it's a pending amount listed originally on other transactions, and thus you just need to keep it open as an open debit on account. Alright, so now we are back to our slideshow. So I guess that as far as transactions we have to cover today. I am left only with one part, which is the key AR reports. So I'm gonna move to the output now to discuss some key reports related to the AR function. So under output, accounts receivable, then transaction submenu. This is all the mandatory or all the key reports available for the accounts receivable. We may not have time to discuss each and every report, but at least I'm going to show you the key reports that you might need to use or that you will be interested to run to keep track of your customer balances, your aging balance, your cash and adjustment, and so on. So first and most important report in the AR is the AR aging. And this is a date sensitive report that can give you, according to the date that you select, it will give you the open customer balance, and it will consider, based on the selected date, it will consider whether the transaction was paid or no. So the good thing about that report, that if you go backward, if let us say you want to see your aging as of the last month, that's not a problem. You can set back the date, and the report will go backward to that date and see what was the balance as of then. So in other words, if the invoice was open as of that date, it will show up on that report, even maybe it's paid later on during the current month. So that's first parameter. Yeah, you can select the date of the report, as of which date, and accordingly the system will calculate the open aging, debits, credit, and so on within this month, the previous month, the previous 90 days, 120 days, and so on. So it's a standard AR aging report functionality that give you the invoices due by 130 day at a time, depending on the aging date that you select. Normally you would say, you can say new page per account. For example, if you want to print it like a customer statement and you want to mail it or email it to your customer, so it's better to choose new page per account. This parameter will simply segregate each account transaction and will not mix them up in the same page. So you can detach each account report and you can mail it or you can send it separately. Include keyed off transaction would typically be yes, meaning that if the transaction is paid at that time, the system will consider it, and this is the default. Balance, you can either choose both, which is the default situation, or you can see only debit invoices or credit transaction. So both would include also both types of transactions. Just to make the story short, you can sort that report by any of these options, and the sorting here will help you see the transactions in the way that you want it to be ordered, like is it by account, is it by payment term code, by sales rep, etc. So you can choose the way how the system will order or will sort the customers in the aging report. And next we have three formats actually of that report: detail, summary, or short. Detail is transaction by transaction. Summary just give you an overview of the account balance. Short is good if you are running that report for end of month reconciliation, so you can see just one line for each account. So I'm going to show you an example of each and every format now. All the other criteria is just simply optional to fine-tune your criteria. Like you want to see balances greater than a certain amount, you want to see the check number of the customer. So if you choose yes, the customer check number will show up for credit transactions. If you want to eliminate accounts that are no longer active, so you can choose only active status customer, you will exclude cancelled status. So all these are parameters, as we mentioned, to fine-tune your report criteria. By default, if you did not select any account code, the system will scan all the open transactions for any account and will give you the report for that. So here is the detailed report format. It starts by the account information, then it will list the transactions we have. So let me see, here it is. This is the same account that we were working on, JCP. So it lists each and every transaction, either invoice, debit, credit, or discount. So it will give me a transaction by transaction, the date, if it's a current balance, if it's overdue, it will list it under the proper date bucket. So here, that means that this invoice with $500 is overdue more than 90 days. If it's current balance, it will show under current. If it's 30 days due, it will show under 30 days, and so on. So this is a detailed format. The summary format is just showing you the subtotal or the overview of the account. So each account will give me just the total aging, the unapplied credit, and the net AR balance. So total invoices minus total open credits, and then the net AR. So that's an overview, and as you can see, each account is showing in one page. The last format is the short format. And this one, as I mentioned, many people like to print that in case of they just run their end of month reports and they would like to have an overview of the whole business or of the whole company, how each account balance is doing, how many invoices are overdue, 30 days, 60 days, 90 days. So that's a very brief format, one line per account. It gives me the account code and name, the balance, total balance, and the due invoices or the overdue invoices based on the invoice due date. Then it gives me a grand total for the whole company for all customers selected. So that's the AR aging report. Second important report is cash and adjustment. And this report, as it appears from the name, it's a journal for your either debit and credit adjustment or the cash payment. So both can be listed on that report. So cash and adjustment journal report also comes in two formats, detail or summary. Detail is itemized by transaction. Summary is just total by account. You can narrow down your selection to either cash transactions or adjustment transactions or both. So you can use that report, for example, to reconcile your day-to-day deposit slips or day-to-day cash flow. If you select cash transaction only, it will print only payments, excluding any adjustment. If you choose both, then it will list the cash plus any adjustment, debit or credit entered for that criteria. You can also include or exclude the AR or non-AR or both of them. So if you choose both, it will show up AR payment and non-AR payment, as we discussed in the beginning. Then all the other criteria down here is optional. You can choose a certain activity date. If you click here on that little drop down, you can have a predefined date like this month, next month, this week. So all these are predefined date criteria that you can use instead of typing in the date manually. You can choose that little tip. And as we mentioned, here comes the role of the credit adjustment reason and the debit adjustment reason. If let us say you want to run that report and you're just interested to see any discount transaction, so you can filter that by using the related credit adjustment reason. Same way, if you want to run that report to see only, or you are interested only to see only chargebacks or freight adjustment, debit correction, so all that can be selected using either the debit adjustment reason or the credit adjustment reason, and accordingly the system will filter and list only the transactions that belong to that adjustment reason code. So I think now if we run that report, it will list for me all the transactions that match this criteria. So it will start by listing the payment. So it describe here the payment type. It will list the account code, the check number, And as we mentioned, there is a transaction number and a batch number which are given by the system generated, and this is the total of the payment. So the good thing about that report, it gives you a subtotal for each transaction type. So you have a subtotal for all the payments, then you have a subtotal for any adjustment that fall in the selected criteria for that adjustment reason, like chargebacks, discount, allowance, etc., depending on the adjustment reason code selected. So that's pretty much a very good report to let you manage your AR and see by customer how much payments they paid, let us say this month, this week, or this day, and what was the adjustment given or discount allowance given to them within the same period. You can use this report in several ways. As you can see, if you fine-tune your criteria, you can sort it by customer, so you can get totals by account instead of by transaction. So you can see for each account, you can see how many payments you got, then subtotal for chargeback, subtotal for the subtotal for the whole account. Then it goes to the next customer and so on. So the sorting is very important to give you the right subtotal by the sorting option that you want. So now we covered the AR aging cash and adjustment report. There is other reports that you can explore at your convenience, at your own time, but let me just show you one of the important couple of reports. Customer history is actually for anything that has been paid or keyed off. So this is good to reconcile your key off. So after you apply debits and credit and you key off both of them, it might be a good idea to print that report in order to see what has been done and to keep a record of what has been applied. So if I selected a specific account code for a certain date, let us say today's date or whatever the date of the history that I'm looking for, you can run this report in two formats, A or B, as we'll see both of them now. And this report will only list the transactions that you have just keyed off. So it gives you what sales order or debits keyed off against what credit or payment, and this way you can reconcile and make sure if there is any pending balance for that customer, you can keep track of it, or if there is any problem or mistake happened during the key off session, you can also catch this by looking at that report. So again, this report is giving you what has been keyed off only using the customer code as a sorting option, and then the history date or when the transaction was keyed off. It lists both debits and credits and give you the total for each session if in case there is a balance left open on account on any transaction. So that's a good example. We have here 117 sales order invoice, while I have check payment for 100. So I have here on that transaction open on account with $17. If the total payment matched the total credit, then nothing will be left, it will be total to zero. The other format is is also interesting. Format B of that report is showing you the same information for the key off, but it's listed in columns instead of transactions. So here it gives me each account history number and history date, and it will classify the invoices under the AR balance. Any chargeback or any freight or discount allowance will fall under the appropriate column, so you can see it in a more representing way. So actually, the way how the report classified in column, it depends on the adjustment reason code that you selected. As we discussed, that's another reason why the adjustment reason code is important, because according to that, the system will put the discount or the adjustment under the proper allowance column. So it could be freight allowance, it could be discount allowance, miscellaneous allowance, or it could be a credit adjustment will fall under credit balance in general. So again, just another layout or another format of the report that lists your open AR invoices, and list next to it or in the same report in a different column, it will list the discounts given, the credit adjustment given, and so on. Okay, I guess other reports are less important and it's self-explanatory. You can like look at it and try to see what it does. Like sales journal, this is, I guess it's a key report, just a listing of invoices done during a certain activity date. So you can select your criteria again. How do you want to sort the report? By invoice, by account, by date, etc. Then you can choose the activity date, this month, last month, previous month, etc. You can filter down your selection. You can narrow down by any of these parameters, and then the report will simply give you a list of sales journal or a list of invoices sorted by the way that you would like the report to show by. So see this month. So that's basically like an invoice log. It just lists each invoice for the customer, showing the invoice date, the invoice quantity, the shipped amount, any discount given, and invoice amount. So that's a good report for keep track of your sales journal day to day or for a specific period to date and so on. All right, so I guess we covered the most key reports. So I'm gonna open the discussion now for anyone who has any questions. So if you guys have any questions, I'll unmute the microphone. Just feel free to bring your questions and we'll share it with everyone and see if you have any questions or how to run reports. Okay, anyone have any questions? Feel free, just go ahead and speak out and it will be shared by everyone. Okay, I guess no one has any questions. So,
can you hear me?
yeah, hi, is this Eric?
Hi, yes. How are you, Al?
Hi, Eric, I'm fine, thank you.
I had a question regarding, this is something that came up recently. Most of our invoices are factored, and we're not posting receivables. We're not actually tracking receivables. Once we invoice a factored invoice, it gets, I guess, cleared out. We're not tracking the balances.
Right.
However, there was an incident where we needed to post a charge, or I guess credit a chargeback that was given to our factor because we needed to track that in our sales commission. And I wasn't sure what the impact is if we need to create a debit or I guess a credit for a customer that doesn't really have any balance because we're not tracking invoices.
So in that case, Eric, what my understanding is the original invoice is marked as if it's keyed off or as if it's paid. And then
Right.
later on you have a credit or you have a chargeback that was issued by the customer, right?
Yes, exactly. The invoice is when we post when the invoice is created, it's keyed off automatically.
Okay. So in your case, you have to create a credit adjustment. So using the credit adjustment will be credit back the customer, but I guess the starting point you consider, did you receive the full amount from the factor, or in that case the factor actually issued you the payment less the credit adjustment or less the chargeback?
Yeah, I mean when the funds are made available, when they post it on their account on the report to us, they show the chargeback as being deducted off of the full amount.
Right, right. So I guess in that case you have to do two things. You have to create first a debit adjustment with the original amount that was deducted and it was shown as not paid from the factor. And then once it is settled, you will key it off with a credit adjustment to key off the debit adjustment that originally initiated. In such case, both debit adjustment and credit adjustment should not be linked to a factor code. So when you create the debit adjustment to represent this amount, make sure to remove or to blank out the factor code. This way it remains on the account as pending amount or as open debit on the account until you settle it, as you mentioned, with the chargeback and with the credit adjustment. And the credit adjustment amount is the one that will ask you to charge back the sales rep commission with an equivalent amount. So I guess the best handling of that is two things. Debit adjustment, once you know or once you are aware from your factor that there is a pending balance to be paid or a pending balance that was actually deducted, you have to record that as a debit adjustment, not link it to any factor. This way it will show up as open AR for that account. And once you dispute it or once it's actually settled, you issue a credit adjustment against it, and the credit adjustment will simply key off the debit adjustment and reduce any sales rep commission with that amount.
Okay.
I guess that's the best practice, because in other way in your setup, I think we have set it up to always not to post AR factor. So once you create a factor invoice, it's marked as if it's paid fully. So
Yeah.
you are actually reversing it. Once you have a chargeback or a disputed amount, you have to record it as debit first, and then the credit will come to settle that debt.
Okay. Thank you.
You're welcome. Okay, any other questions? I guess we still have Mary, Eric. I don't know if Elizabeth is still there. So Mary, do you have any question? I still see you attending. I guess no. All right, great. So thank you everyone for your attendance, and I'll see you next time in our AR session number 2. Thank you and have a good afternoon.
Thank you.
Thanks. Bye.